9 a.m. in Shanghai, Shenzhen, and here in Hong Kong, you're watching The China Show. I'm Yvonne Man with David Ingles.
Good morning. We are counting down to the open of markets in Greater China. Our top stories today: Asian stocks extend a record-breaking global rally as investors look past geopolitical concerns. China in focus after the CSI 300's best start to a year since 2015.
AI remains a top market theme. Nvidia boss Jensen Huang saying highly anticipated data center chips are nearing release this year.
Also ahead, Nicolas Maduro and his wife plead not guilty to drug violence and weapons charges as his administration reasserts itself in Venezuela.
And South Korea hits the reset button on relations with China as their two leaders meet in Beijing.
Welcome to the show. A quick glance at market action, and we are, as you can see, slightly to the upside. When you look at U.S. futures, though, slightly to the downside. All that being said, that was let me use the present tense. Still is a terrific start to the year for risk assets. Looking at how much these benchmarks have rallied, the Kospi, understandably so, and there's a Hyundai story, by the way, which we'll get to later on as well. Fantastic start to the year in the Kospi. In fact, at about this level, we're about 4% from getting to a level which would be double the level just 9 months ago. So just imagine the rally there. Taiwan coming online. Within Taiwan, of course, there's a Seong-Hyon story. There's the broader Nvidia story and what was announced, and we'll get to all of that in a moment. Seong-Hyon out with fourth quarter sales after the close yesterday. I think it was a 20+% year-on-year jump, 1.5% to the upside there. The dollar story, two things, right? You have geopolitics, and then you had the ISM numbers coming in at a 14-month low, rather, and that's really what the market's paid attention to. 1203 right now on the Bloomberg Dollar Index. A glance at commodity markets with Brent edging higher as of the close, and this is what we're doing as far as Brent is concerned. Precious metals also seeing some consolidation, but copper is separately still the story to watch. 13,000. Imports, flows, and concerns around supply coming through in the copper story. In fact, how is that playing out as far as the Shanghai contract is concerned? Flip the page, you have the contract coming through. A50 futures, fantastic start to the year on the CSI 300. We're very near a 4-year high. In fact, on the Shanghai comp is also very near a 10-year high. So we'll watch for milestones there. And as you can see, dollar China still below that 7 handle.
Yeah, the key question is how much more appreciation can we see now that we are seeing, right, that sub 7 for China right now. And certainly it's going to be a big key theme here as we start to see more momentum coming back in this Chinese market. And at a time when you're talking about Venezuela, right, where, just now we just saw a headline that there are maybe some blasts still around the presidential palace. Markets are still taking it in stride right now. Yeah,
there are lots of reasons that they are taking that one in stride, right? And I think when you look at the announcements coming through out of CES in Vegas,
yes,
a lot of the announcements in China going into the new year.
Kwai show yesterday, right?
Kwai show, Baidu. In fact, when you look at what led the rally in the CSI 300 yesterday, the chip story, right? Yeah. And I think you also had Premier Lee underscoring, CCTV reporting this yesterday, underscoring the need and urging the need to upgrade robotics and AI. So those are the sort of sectors to watch going into the open today. Extremely heavy volumes in the onshore markets yesterday.
Yeah, let's get back to CES as we just mentioned, right? Because plenty of news coming through there already, where Nvidia CEO Jensen Huang says the company's highly anticipated Rubin data center chips are nearing release. Speaking at Las Vegas, Huang said that customers will soon be able to try the new hardware that's expected to speed up AI development.
This is the Vera CPU. It's got 88 CPU cores, and the CPU cores are designed to be multi-threaded. But the multi-threaded nature of Vera was designed so that each one of the 176 threads could get its full performance. So it's essentially as if there's 176 cores, but only 88 physical cores. So these cores were designed in using a technology called spatial multi-threading. But the I/O performance is incredible.
All right, let's bring in our Bloomberg Tech co-anchor, Ed Ludlow. He is in Vegas. He was there at the keynote speech with Jensen Huang. Ed, fantastic. Thank you for joining us today. There's the technology and there's the timing. Let's start with the timing. Interesting timing as we start off this new year.
Yeah, I mean, there was a great deal of expectation about this keynote, but in all honesty, it kind of fell flat because their confirmation that Vera Rubin systems will ship in the second half of 2026 is a repetition of what they said in November. But it was one news headline in a presentation that, in all honesty, kind of lacked a lot of news. It's important that we have confirmation that Vera Rubin is going into full production because Nvidia commits on an annual cadence to a new generation of technology. And if you have a gigawatt of data center capacity that's based on Vera Rubin, it's capable of 10 times the throughput of the same gigawatt of capacity that has the prior generation Blackwell. But if you're a hyperscaler or an AI lab, it's going to cost you 1/10 of the Blackwell cost to generate a token. So it alters the economics of what's happening in AI. It gives the market confidence that they're moving to schedule to get it into the marketplace.
Is there any sort of, I mean, obviously the market has continued to be so bullish on Nvidia. We saw the stock move on just that headline alone, as you mentioned, Ed. You know, where could we see signs of disappointment from this market then, if we get more details on this?
Yeah, it's the bar is set very high in terms of what Jensen Huang does when he goes on stage and does a 2-hour presentation. You know, in October in Washington, D.C. at their own event, he surprised everyone by almost giving financial guidance and saying over the next 5 financial quarters, they expected $500 billion of sales split across Blackwell and Rubin. And so the assumption was he would do something similar here at CES, and he didn't. But it's kind of a 48-hour extravaganza because the moment he was done with his keynote presentation, which kind of talked to all the big picture themes he's always talked about, physical AI, the next phase of AI for Nvidia, he then went and met with the analysts, and there were many more headlines from that. We can get to them. Tomorrow he'll speak to the press. He'll come on Bloomberg television, and there'll be a lot of more opportunity to ask, I guess, more granular detail that the market wants to hear right now, which is basically what is the market for infrastructure look like in 26 and beyond.
Yeah, we'll look forward to that interview, Ed. Lots to talk about when it comes to, of course, robotics, autonomous driving as well with Jensen Huang, Ed Ludlow there, our Bloomberg Tech co-anchor at the CES in Las Vegas. Of course, Ed is joined with our Asia team as well. Sherry as well as Belle are on the ground there in Las Vegas, and we'll bring you full coverage, of course, tomorrow. In terms of what else to watch in Greater China here today, this is, of course, your agenda. We talked about the Li and Xi meeting and really what came out in that second meeting between the two in about a month, and certainly that is going to be a key focus here. We're still watching a lot of the volatility that's picking up in Hong Kong, but yeah, that rally in the A-share market yesterday was pretty nuts. If you take a look at what happened, not just in the CSI 300, the Chinex continues to churn quite well. Southbound flows were quite strong yesterday as well. We'll still watch that yuan fix, given the strength that we've seen. See any sort of pushback from the PBOC? We'll see. We're watching some of these Korea ETFs in Hong Kong as well. The leverage ones in particular, just given the big moves we've seen on some of these big plays here yesterday. And of course, sectors like metals, given the copper rally, gold, silver still doing very well, tech, and of course chips still very much in focus today.
Yeah, I think that I think we will see what the market makes of this, but that visit from Premier Li, reported by CCTV, he visited BYD and Midea, and also underscored the need for an upgrade on robotics and the like. We'll see what market makes of that. Of course, 6 cents of 1% to the upside right now. In case you missed that, right? So Yvonne just mentioned right now, it was quite a crazy rally the onshore markets yesterday. So here's how we closed: 2% on the CSI. We're about half of 1%, give or take, from taking out the recent high, which takes us to a 4-year high. IT, healthcare, and consumer staples, as you can see, leading that rally quite substantially. Volumes were also on the heavier side of things to kick off this year. Joining us here on set to talk us through what happened and the outlook for 2026, Hao Hong, Managing Partner and CIO of Lotus Asset Management. Nice to see you and Happy New Year.
Happy New Year to you.
There's been not that it's happened only yesterday, but there's been a change in market leadership in the Chinese markets. It's onshore that's been taking the helm. What do you think is going on there?
Yeah, well, I think because last year, in 2025, Hong Kong has been doing substantially better than Asia. I think Asia only catch up after November-ish. And also right now, if you look at the leadership in the market, right? So it's on one hand, it's the technology sector that is going on full cylinder, and then at the same time, I think the industrial metals are also doing very, very well as well. So I think many of the industrial names is actually coming back. It's giving people a sense of a cyclical upswing, even though the economic data is not showing it. But I think in the market, the sentiment is back, and people have the money to spend, and so they're ready to get back to the market.
And do we still need more of the fundamentals to improve for this rally to continue?
I think so. I think right now, the fundamental is still quite weak, right? So we have already hit the peak of the cycle in third quarter 2025. I think people now is looking for policies, and I think in recent days, there's sort of a policy talks from the top, basically saying that we're going to support the property market at all costs and all that. So I think people are actually looking forward to the delivery of the policies.
I mean, there are two sides to the policy story. One is on the macro front. One is specifically on specific sectors, right? So whether that's consumption, the extension of subsidies, or calls for financing for tech. Are there specific industries that stand out to you this year that might provide some alpha? I
think, if you look at the 5-year plan, starting this year, basically, top 3 sectors is on the list. The first one is technology. I think the second one is build up the comprehensive industrial system, and then the third one is consumption. I think people should look for clues from this 5-year plan.
Okay. In terms of AI, though, I mean, it seems like it's the chip makers that's starting the year in a very, very strong way. Do I continue to focus on the hardware? I mean, or do I look at everyone's talking about 2026 as the year of adoption? Is
everyone else?
Everyone else. I mean, where should I lean more towards, or is it all of the above?
No, I think all of the above. I think the advancement of the hardware actually bring forward the advancement in software as well. And I think a couple of days ago, DeepSeek actually come out with a new paper, showing a new way to train your models. It's reminiscence of last year this time, right? So it's more or less the same. DeepSeek come up with a new model that is showing huge potential for Chinese techs, and then everything rallied for 3 months. I think a similar episode is happening right now, right? So I think DeepSeek is making breakthrough. Many other Chinese AI companies are making breakthrough as well. For example, Baidu's listing is a semiconductor unit. I think late last year, Alibaba is claimed that they make a breakthrough on its LLM models as well. So I think there's just so many things going on, and also if you look at the liquidity in the market, is still positive. It's still rising. Therefore, I think it's conducive for risk taking.
You posted something on X a few days ago, which was, I think, your 2025 calls, and you had AI do a summary of it, right? And I think we made a graphic of that. What did Hao Hong get right in 2025?
I like how you prompted it. You said, famous economist Hao Hong. Humble brag there.
Just in case there's any.
I mean, there's probably other Hao Hongs out there, but not any famous economists.
Do you feel the same way about what you got right? Have a look at the list.
Yeah, I think gold and silver is probably my most prominent call last year, right? So I got it exactly right. And I think the trend is still continuing. So I think after consolidation, gold and silver could move substantially higher from here, even higher than last year. Chinese tech had a good year as well, in the sense that for the first 3 quarters, Chinese tech actually took the market leadership. All the way until mid-October, then I think the rally sort of paused a little bit. The yuan, I think, is just phenomenal, right? So despite a background of the second trade war, I think the yuan actually did quite resilient last year, and then starting to rise into this year. And I think the appreciation of the Chinese yuan's exchange rate could go much further from here. And commodities in general is going through the roof as well.
Do you foresee for the renminbi any pushback from the PBOC? At what point would they might start not liking, or at least not tolerating this appreciation?
I think PBOC has been making some sort of gesture that it's not very tolerable of a very fast, rapid pace appreciation, because that could sort of interfere with the policy, the monetary policy domestically, and also sort of hold back some of the strengths that the Chinese exporters has been enjoying in the past years. But I think it's not entirely up to the PBOC anymore, right? So you can see probably the reference rate and the market rate should start to diverge, and also going into the new year, because the Chinese yuan has been sort of undervalued for so long, right? So for the past couple of years, the real effective exchange rate for the Chinese yuan is actually depreciated almost 30%, right? So how could you explain, in the background of very strong Chinese exports, ever rising, Chinese trade surplus, and then the yuan is actually going depreciating in the past couple of years. So I think that sort of lay out a sort of a good foundation for the yuan to appreciate this year.
Anything Anything to avoid?
Anything to avoid. I think in the rising liquidity environment, we love everything. It's just a matter of it's just a matter of who is rising more or less.
Okay.
So I think we still like industrial commodities, gold and silver, Chinese tech and Chinese RMB. I think the trend that is starting late last year will continue well into this year.
All right, Seong-Hyun. We'll see. We'll have to put everything in for
love everything.
ChatGPT once again at the end of the year. See if you're right. Seong-Hyun there, managing partner and CIO of Lotus Asset Management. We are counting down the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show. Happy Tuesday. Futures are up this morning. Ousted Venezuelan President Nicolas Maduro has faced a U.S. court along with his wife, pleading not guilty to narco-terrorism charges. Their appearance before a New York judge does set off an extraordinary legal battle with major geopolitical ramifications. Let's get to our senior editor, Derek Wellbank. He joins us from San Francisco here this evening. And Derek, just tell us what happened in court today.
Well, it was a remarkable scene. Look, Nicolas Maduro is one of the, I guess, most recognizable faces in world governance, certainly in Latin America. Stands, 6'3" tall. He is a clear head taller than all of the agents who were guarding him going through this process. Stands in a U.S. court, declares that he's innocent, he's not guilty, says he's a decent man and still president of Venezuela, except that he had been kidnapped, his word kidnapped, from his home in Caracas. Now, he certainly was taken from Venezuela by U.S. forces. He is now stripped of all of the sort of regalia of state, instead processed very much like anybody else would be, albeit with a ton more security presence, in a courtroom in New York, facing these drugs-related charges that he had theoretically been facing for the United States for some great amount of time. It is one thing very much to say this world leader is involved in drugs trafficking and we don't like that and we'd like for things to be different. It is very much another thing for more than 100 special forces individuals and to sort of storm in, grab a world leader and present them to a United States court within the matter of a couple of days. This was a monumental operation. This is one of those sort of weekends that will remain in history. It'll be something that everyone's going to be talking about for years, decades to come.
And I guess the framing of how that conversation evolves will also depend in parallel to what happens domestically in Venezuela. What's happening right now? What are we watching specifically there over, I would like to say domestic affairs, but clearly that concept has been blurred somewhat.
Yeah, well, David, I think the real question right now is sort of who's running Venezuela, and I say that in all of the possible ways to frame that. Literally, who is the person who's running? Right, it's going to be, someone who is an ally to Nicolas Maduro, who is now, in that position, stepping up one rank to go. That's, she was sworn in today. All of that is there, but Donald Trump has made very, very clear that in his mind, he is the ultimate person in charge of what's going on in Venezuela. Marco Rubio, the U.S. Secretary of State, who even when he was Senator of Florida was a very, very big Venezuela hawk, has been an incredibly influential person when it comes to U.S. policy on Latin America. He's going to be a point person for that relationship going forward. And so, what does that look like, sort of day on day? Now that's one side. The other side is who pays to get Venezuela up and running. Trump has made clear that he sees American oil majors as the folks who will be going in to make those investments, potentially repaid by the United States in some form of way. That we're still waiting to see exactly what some of those companies, your ConocoPhillips, your ExxonMobils and such, what their take on this is. Yeah. But the U.S. Energy Secretary is going to be talking to some of them later this week.
Derek, fantastic coverage so far. It's been busy, and no doubt it will continue to be. Derek Wallbank in San Francisco for us, a senior editor with the latest there taking place. Right, now just on that story, an extension here too. So Bloomberg has been told that China's top financial regulator has asked the banks, the Chinese banks, to report their lending exposure to Venezuela after the U.S. ousted Nicolas Maduro. And sources say the regulator also urged banks to closely monitor Venezuela-related credit to assess potential risks to lenders. Of course, China has lent, the backdrop here, has lent billions of dollars to Venezuela over the years, mainly to support energy and infrastructure projects. Okay, as far as market reaction to that, we'll unpack most of the things. All things equal, we're pointing to the upside, 26.5 on the Hang Seng Index. The opening bell just under 7 minutes away. This is the China Show.
All right, Hang Seng pre-market looking pretty good right now. We're up 0.6%. It continues to be an up arrow story when it comes to the tech trade. And certainly we're watching, of course, HS Tech up 0.8%. Southbound flows we talked about were quite strong here. I think it's some of the highest levels we've seen since October. So that certainly is helping things here today. 8 shares are up 0.5%. We're still seeing a 6.98 handle for dollar China. In terms of analyst actions, it's very much commodities based, given what we heard from the call from Goldman. So given what we saw with aluminum prices, gold, and the like, we are seeing the likes of Chalco, A and H shares, though, have been cut to a sell. So at least still keeping that sell rating, or cut to a sell rating there, but price target at 910. So perhaps maybe things are now looking a little bit too heated there, according to Goldman. But yes, China coal, though, has been raised to a buy from Goldman Sachs. Angan Steel also has been a cut to a sell. In terms of what to watch, Kuaishou, that continues to be an ongoing positive story, given this whole AI video or model that came out here. So we saw double-digit gains yesterday. We're seeing another 2% gains there, given some of the overseas sort of popularity that we've seen in the U.S., in Korea as well. BYD, Medea, so Li Chan did visit both of these companies yesterday, and really talking about the urge for innovation, robotics, and drones as well, according to CCTV. The Open is up next. This is Bloomberg.
Good morning. Welcome back. You're watching the China Show. So we're going into the open today coming off the best start to the year onshore markets, I think in about 10 years or so. A couple of levels to watch, 47 on the CSI 300. Above that, we're back to the highest in about 4 years. Shanghai Comp is also very near the recent high of 4029.50. Above that, we're back to levels last seen in 2015.
Yeah, 2015. So it brings us back to, of course, 10 or 11-year highs here right now. We're also watching Shanghai Composite as well, getting closer to those levels that we saw back, I want to say,
about the same time,
yeah. 4,000 around 30 is the level to watch now, of course, for those levels. But yeah, this on the backdrop of Asia stocks already hitting those records and extending that record high once again. And it's really kind of bringing up a lot of, as even Hao Hong mentioned, some of the cyclical factors of this market in China as well. The PMI numbers that we got for December, we'll get a bit more of that, because that came out during the holiday, sort of. But maybe now there is some sense that maybe things are looking a little bit better. Is it signs of recovery? We'll see, right? But yes, what we are seeing right now as onshore markets are looking a little bit flat, but just continue to watch copper. There you go. This is, of course, the China futures there, which are continuing to follow what we saw in the LME contract, which was 13,000 level, which another record for that one. So we're seeing 3.5% gains for, of course, some of these Shanghai futures as well. But yes, we talked about how the dominance of this market has tilted more towards the onshore market of late, right? So we are seeing, of course, yesterday the best start since 2015. So certainly there is momentum here right now. So slow going so far, but Shenzhen is one to watch because Chinex continues to be, it's almost like quietly rallying, but yeah, in some ways we just overlook it somewhat how, but it is doing quite well and sometimes even outperforming some other benchmarks out there. You look at how Hong Kong is doing as well. Obviously, we've been talking about the tech trade. That seems to be ongoing here once again. Look at HS Tech. We're up 1% here. Apart from Alibaba and Xiaomi, you are seeing the likes of Tencent, Baidu, and Meituan are all gaining here this morning, right? You talk about Baidu, talking about their AI unit or chip unit about to get listed. When they talk about Kuaishou and the double-digit gains that we saw yesterday on their AI image model.
Is that good or bad for celebrities?
I don't know. I get so confused when I see it on social media of these people posing with celebrities, and I'm like, is that AI? And most of the time it is.
Yeah.
Love it or not, yeah, it's interesting. And then so certainly that's one thing to watch in this market, right? And how Hong said it's all of the above when it comes to the whole AI and how you position in China, whether it's the chip space or even just AI can be applied to. So certainly that's what we're seeing. But southbound flows, we'll see if we can see another day of this, right? So the flows did hit the highest since October yesterday. And so we are seeing, it seems like, more in terms of momentum today in Hong Kong. Hang Seng is up 0.6%. In terms of what some of the top mainland tech movers are, we've been focusing on the chip space yesterday, where we saw a lot of moves there. So Advanced Micro, for example, we're still seeing some of that here today, but not as robust as yesterday. BYD, drone makers as well. We did talk about Li Qiang, the premier, did visit BYD and Medea, some of these companies, and talked really about the whole innovation side of things, and robotics certainly gave a lot of attention there. So you are seeing some of these stocks rallying on the back of that here today, with the likes of BYD up close to 1%. And copper stocks, right, given what we've seen in this copper rally. So yes, there's a lot of issues, or at least people concerned about what U.S. tariffs are going to look like. And I think the U.S. inventories is what's really kind of driving a lot of the copper price now. But there you go. Jiangxi copper up close to 4%.
Yeah, copper takes the gold today. Now,
yes.
Speaking of something that's hot, we're looking at shares which have just been halted in the last few minutes or so. We're looking at Japan here. Hisamitsu Pharma. So if you're not too familiar, you might be familiar with some of its products. This is the company that makes some of those hot patches. So shares were halted. Initial spike, we understand, based on our sourcing. Let me just read it so I can be more precise here. That management is mulling a takeover bid to privatize the company. The deal could be worth $450 billion. That's yen, or in dollar terms, that's under $3 billion. That's what we understand so far. The buy proposal is set to be announced soon. That's also according to people familiar with what is going on. As things stand, we're halted, but as you can see, shares already had somewhat react to this breaking line that has come through so far. Okay, let's pivot back from Japan, and once this gets underway, if it gets underway, we'll revisit that, of course, back here. And also that's been something that's been actually on the hotter side of things. Let me just borrow that concept. When you look at the 14-day RSI of dollar China, onshore, offshore, we were trading at, 20? So really to the downside, a lot of momentum there, both as you can see the spread between the two, and as you can see, on absolute basis, we're back below the 7 handle on the Chinese currency. Let's bring in Becky Liu, head of China macro strategy at Standard Chartered Bank. Happy New Year. Nice to see you.
Happy New Year.
We're wondering what's happening with the currency and why it's so strong, despite the weak cyclical backdrop.
Well, back in December, it was quite clearly seasonality. A lot of the Chinese exporters has been underhedged, and we know that they've got altogether more than 1 trillion of trade surplus last year. But the conversion ratio has been the lowest since 2016. So many of these corporates were rushing to convert a bit more before year end. But getting into January, we think the momentum is likely to be less strong, especially compared with December. Dollar CNY, dollar CNH is likely to hover around 7%. 7 in the foreseeable future, in our view. So first of all, is a seasonality. We started to see a stronger dividend payments from some of the onshore companies that are listed in Hong Kong. At the same time, we are also seeing that fixing started to see a slightly more weakening buyers compared with the previous few weeks. At the same time, we also saw even state media start to flag about this one-way appreciation back as
the
risky.
Risk of one-way bets.
So there's a bit more pushback already, you're saying?
Well, I think it's not yet to the levels that they can't tolerate a bit more appreciation. Indeed, we believe that this year CNY will still likely to see some appreciation. One is that the trade surplus is very structural. If you look at last year's export growth, 3 quarters are driven by industrial upgrade-related products. And at the same time, when China is having this renewed push to renminbi internationalization, they will favor a slight appreciation expectation from here. So recently, I think they just want to tame the speed of very fast pace of appreciation. So in general, we think appreciation expectation is going to be here to stay, but the actual pace of appreciation will likely to be quite modest and probably just follow what's pricing by the forward.
Okay. A lot of what happens there is contingent on the macro, and I wonder I think if I can ask my producers, we have a chart that actually shows swaps. There are some, I think we've seen this chart with you as well, some early signs that inflation will be, I wouldn't say coming back in a big way, but better than the last 12 months. What's your view on inflation, whether or not rates markets are getting that one correctly?
Yep. So the deepest deflationary pressure is now behind us. So we have seen both CPI, PPI bouncing back from the lows. So if we take a look at this PPI deflation, the worst is over, especially with the commodity prices rising, this anti-involution preventing the corporates from selling below cost and so on. So PPI deflation is likely to narrow further from here. But if we look at the general inflation picture for China, it's not yet a year for inflation. It's the year of gradually moving away from deflation. So if we just look at that from a numbers perspective, in the last quarter, we had the worst GDP deflator since 1999 of more than -1%. This year, we are probably looking for GDP deflator returning to a level that's quite close to zero, but not yet zero. So it's at the end of this round of the deflationary cycle, but it's not yet time for inflation yet.
The PMI numbers that we talk for December.
Yeah.
I mean, all of a sudden we're back above
50 across the board.
50 across the board. Is that a one-off, or do you see that maybe there is some signs of recovery now?
The signs of recovery remains relatively modest in our view. We started to see a few things changing. One is that the government is putting a lot more focus in terms of investment. So reviving investment, it's one of the key agenda at the beginning of this year, especially across the board, like manufacturing investment, infrastructure investment, real estate investment were deeply in the negative territory since the second half of last year. But if you look at the first batch of special bond related funds that are deployed for infrastructure investment, it's almost doubling the amount versus the first quarter of last year. But aside from that, if we talk about consumption, etc., it doesn't look like the government's push is going to be as strong as last year. And again, if you look at the funds under the special CGB bonds for the so-called goods subsidy, the amount that they gave for the first quarter of this year, it's more than 20% lower compared with the first quarter of last year. So, and if we look at retail sales, the moment when you have all these direct subsidy fading slightly in the second half of last year, retail sales came down quite immediately. So we still think it's going to be a muddle-through situation given the high base in the first and the second quarter of last year. It's not very easy to see a very rosy number for the first half of this year in our view, but it also means that quite a lot of the economic stimulus, especially fiscal funds expenditure, will be front-loaded again.
And do you think that's because the softer fiscal support, is that a sign of confidence, or is that a sign of fiscal constraint?
We think in general, like when we look at the aggregate amount of fiscal expenditure, it's probably going to be kept at a similar pace of last year. One is that if you got PPI rebounding, you typically would get fiscal income slightly rebounding. So even if you keep the deficit the same, then your spending momentum would be the same as well. The key difference this year is that they are reallocating where they are using the funds. So they are slightly scaling back the direct subsidy to, for example, the purchase of home appliances. But on the other hand, they are strongly stepping up the investment into a number of areas, like strongly stepping up the support to infrastructure investment. So they are reallocating the funds. The total amount might be quite similar, but of course they also have some fiscal constraints, especially reflected in the infrastructure investment on the back of the local government situation. So that's, again, like this year, we will start to see front-loading of debt swap bond issuance to alleviate some of these pressure. But in general, we feel China is entering a year of consolidation and transformation. The overall economic policy will remain expansionary, but the focus is more on structural reform and gaining long-term competitiveness instead of an emergency mode that they had last year.
Where does that leave rates then? I mean, 2025 we saw the yield curve actually steepen. Can it stay steep?
We think in the foreseeable future, probably even last through the entire first half, yield curve might stay quite steep. On one hand, China is still relatively reluctant to cut rates in an aggressive way. So if you look at the PBOC's Q4 monetary policy report, I think there's one interesting statement that the goal is now changing to maintain low financing cost instead of driving financing costs lower in the previous quarters. So it doesn't look like they're going to cut rates aggressively. And on the other hand, there are quite a lot of technical factors supporting the yield on the back end of the curve. So on one hand, we are still expecting strong special government bond issuance. Those are ultra long dated, like on average it's 30-year plus of supply. But on the other hand, there's a lack of demand for long dated bonds at this stage, especially when equity momentum is holding up and when this equity bond to equity rotation is still ongoing. So long as your non-bank advisor not buying that, the back end of the curve might stay relatively elevated.
So what's your number one trade this year, early on?
Oh, well, early on, I think we could still look at the front end of the China rates curve. I think at the very front end, we are still relatively comfortable, and especially market is completely pricing out rate cut expectation, then this would still be a bit extreme. For the CNY, I think I would wait until probably the second half of this year for the performance to gain momentum again. So in the first half, it's more about a range-bound situation.
Becky? Great to have you. Becky Liu there, head of China macro strategy at Stanchart. We're checking the peso here right now, so we're getting some comments from the BSP, Central Bank Governor Eli Remolano, and saying that, look, the BSP, maybe they're leaning towards one more rate cut. So that is what they're saying here. If we get off the fence, it's probably another rate cut, but that's probably about it. One more rate cut, according to Remolano there. That was, of course, back in December. We'll see what else, but they said there still is another rate cut on the table for February.
Perfect.
That's the timing right now.
Yeah, coming off the inflation print, which came out at the top of this hour, which actually came in slightly above expectations. The peso, as you can see, it's 59.40. 59.14.3. I'm just looking at the specific level we're tracking, which would be 59.26 is the level you're tracking, to the upside, of course, or to the weaker side of the peso. Okay, another story out of the Philippines. This is B2B. This is perhaps more B2C here. There we go. So Jollibee, and I think shares are still halted in Manila. Let me just check very quickly. But yes, the spin-off of the international business, and the plan is to list shares in the U.S. That's what we know so far based on that announcement so far. Okay, just ahead.
Yeah, we're talking about China and South Korea.
Here.
Yeah, I was just thinking about chicken joy.
Well, fried chicken.
And then you stopped me. Yeah, got me thinking. But no, there you go. Let's talk about China and South Korea relations here. Leaders reaffirming bilateral ties at their second meeting in 2 months. A look at their latest agreements next. This is Bloomberg.
China is ready to work with South Korea to stay firmly committed to friendly cooperation, uphold the principle of mutual benefit and win-win outcomes, and push forward the development of the China-South Korea Strategic Cooperative Partnership on a healthy trajectory, so as to promote the well-being of the two peoples and inject positive energy into regional and even global peace and development.
It's only been 2 months, but I have that feeling that I'm meeting an old friend I haven't seen for a long time. It's quite cordial and heartwarming. For thousands of years, South Korea and China, as friendly neighbors, have forged friendly relations. I am ready to follow the trend of the times and work together with President Xi to usher in a new chapter in the development of South Korea and China ties.
The Chinese and South Korean presidents there speaking during their meeting yesterday. Let's bring in our China correspondent, Min Min Lo. She joins us now. The tone certainly felt like it was pretty warm. What were some of the concrete sort of outcomes that came out of this meeting?
Yeah, it's been pretty positive. So the two sides signed at least 14 MOUs. And I think for South Korea in particular, the main concern is that their trade surplus with China has turned into a deficit since 2023 because China has been ramping up its own domestic manufacturing. It's been getting harder for South Korean companies to compete in China. So President Lee Jae-myung has been pushing for more trade, particularly in areas like AI, consumer goods, cultural goods as well. So he cited examples of Korean beauty products, films, and games as potential areas for breakthroughs. And we know that China has placed this informal ban on South Korean entertainment in China since the THAAD missile crisis in 2016, right? And the South Korean presidential aide said it could take a while more for China to lift that ban, but they are quite hopeful that with trust building over the longer term, we could perhaps in the future see South Korean pop concerts returning to Beijing. And one of the other big breakthroughs as well is that the two leaders finally agreed to resume a ministerial level economic dialogue that has been pretty much frozen since the THAAD missile crisis. So another good sign that they are perhaps turning over a new page here.
It's hard to look at this in a vacuum, right? Because the geopolitical backdrop between the U.S. and China and Korea, of course, is one of the allies in the U.S. in the Asia Pacific. How is that affecting this dialogue?
Yeah, so obviously Lee Jae-myung has to really walk a very fine line because it's not just the U.S. They're balancing between their relations with China and the U.S., but also Japan as well. And we know there's a China-Japan tension that is brewing, and President Xi in some ways is courting friendlier relations with South Korea, and the economic concessions that we saw today perhaps also coming at the cost of, the pressure from China calling on South Korea to, quote, stand on the right side of history. And President Xi pointing to their combined efforts during World War II fighting against Japanese militarism. So South Korean President Lee Jae-myung, he did reassure that, Korea will continue to adhere to the one China policy. But the other tricky issue is also North Korea, which fired what was suspected to be a ballistic missile ahead of the trip. And because this happened after President Trump seized Maduro, and some analysts are saying that this is just sending a message to North Korea that abandoning that nuclear program could be suicide. So, South Korea is asking China's help to advance peace in the Korean peninsula, but that task is going to become more and more difficult as North Korea likely will want to accelerate its nuclear program there.
All right. Min, thank you. Min Lo there, China correspondent, on the latest, of course, on this Lee-Xi meeting. And there's more coming up on the impact, of course, of President Lee's visit to China. The Harvard University Asia Center's Seong-Hyun Lee joining us in the next hour.
Just a brief look at markets. A milestone, CSI 300 highest in 4 years, Shanghai Comp highest in 10 years at about these levels. Plenty more ahead. This is The China Show.
Here are some of the stories that we're following for you today. The U.S. and over 100 countries have finalized an agreement exempting American companies from some foreign taxes. The deal excludes U.S.-based multinational firms from the 15% global minimum tax negotiated through the OECD. It also effectively blocks other countries from imposing more levies on some foreign subsidiaries of U.S. multinationals. Saudi Arabia is cutting the price of its flagship crude for Asia for a third month amid signs of oversupply in the market. State producer Saudi Aramco lowered the price of its Arab light grade to a 30-cent premium to the regional benchmark for February. It comes as OPEC Plus sticks with its plan to pause supply increases in the first quarter.
Okay, speaking of oil, let's use that as a jumping off point with a look at commodity markets. So we're mixed, not quite the extreme moves that we had on Monday, so call it, I'll hit you a big word, consolidation. There we go. Copper, 1.5%, 13.2 right now. I think we did close below, we crossed above 13, we closed below it into the close, but that's academic at this point. 13.2 right now on copper on the LME. CSI 300 within the sectors there, so we are building on the very strong start to the year yesterday. And within the IT index specifically, so we're up 2.3% there. The biggest gainer percentage-wise on the CSI 300 is a stock, Advanced Micro Fabrication. It resumed trading on Jan 5. That's a semi-play if the name doesn't give it away. Industrial's also feeling some of the moves to the upside. And the benchmarks, let's have a look at that. About 24 minutes into the cash market session, we did hit some milestones here on the mainland benchmarks.
So highest close since January 2022 for CSI 300. When it comes to Shanghai Composite, we're just a few I think a percent or two away from hitting those 2015 highs as well. So certainly we're getting a very good, strong start to the year for Chinese equities already for 2026. Hang Seng is already up some 1%. So today it's more, I mean, both, onshore and offshore are doing quite well here today as well. HS Tech is close to 2% gains here. Bonds are on offer. Dollar China still on the stronger side at 698 levels as well. So one to watch really closely is the currency that continues to be a positive story.
Yeah, so apart from data, we have Hong Kong PMI, we have a bill sale on the Chinese mainland, and I'd also pay attention to southbound flows, which hit 18 billion yesterday, Hong Kong dollars that is, of course, were the highest level in terms of southbound buying since October. You have to consider, of course, that there was a holiday, so there might have been pent-up demand there. That's one to watch. We're still largely positive on southbound flows. The second hour of the China show is next.
Last year, in 2025, Hong Kong has been doing substantially better than Asia. I think Asia only catch up after November-ish. And also right now, if you look at the leadership in the market, right? So it's on one hand, it's the technology sector that is going on full cylinder, and then at the same time, I think the industrial metals are also doing very, very well as well. So I think many of the industrial names is actually coming back. It's giving people a sense of a cyclical upswing, even though the economic data is not showing it. But I think in the market, sentiment is back, and people is have the money to spend, and so they're ready to get back to the market.
We could still look at the front end of the China rates curve. I think at the very front end, we are still relatively comfortable, and especially market is completely pricing out rate cut expectation, then this would still be a bit extreme. For the CNY, I think I would wait until probably the second half of this year for the performance to gain momentum again. So in the first half, it's more about a range-bound situation.
There you go, our guests from the previous hour giving us their take on markets and really where their conviction lies. So short end of the curve for Stan chart, and really for Hao Hong, he says, look, given the liquidity, everything looks pretty good right now in this equity market, right? So we're set for the highest close since January 2022 for the CSI 300. Welcome back, of course, to the second hour. And certainly where we talk about the momentum that we're seeing today, it's not just the Asia market today, it's actually both that we're seeing quite a lot of juice.
Yes. And that's despite, I think there were some downgrades coming out of Goldman in the metal space. Yeah. But, today we're moving in sync, right? We're moving in sync. Yeah. We're looking at positive flow still across the Stock Connect. You are still getting the similar theme in the onshore markets, right? So you have everything from precious metals that's showing up in the likes of Zijin Mining. Some of the chip and semi plays are leading this. Cobalt, of course, is more a materials play, but that's nothing new, suffice to say. CSI 0.7% at this level. We are set to close at the highest in 4 years. Hang Seng Index, we talked about that. Let's flip the page, please, and have a look at how else we're doing here. So we're looking at Hang Seng. There we go, 1.3% to the upside, 330 there. And so it's not just, right, so it's not just the fact that AI is still a theme, right? There are plenty of idiosyncratic reasons in news and announcements to come out of CES, perhaps, that will be fueling this rally even further. In case you missed the last 5 or 6 days, you're just coming back, of course, everything from the DeepSeek publication to the Baidu news to the Kuaishou data yesterday. So we're up 1.3 on the Hang Seng Index going into about 32 minutes into the cash market session here. But yeah, it's the question that we've been posing, and I think we asked this to Hao Hong early on, right? The fact that we've seen a shift in market leadership in favor of onshore stocks. The CSI 300, of course, had a really, really good start to the year. Yeah,
strongest start since 2015, and certainly it's the names that you don't think of, right? Last year was all about Alibaba and all this sort of the big players within the China tech space. But right now we're talking about hardware was doing very well yesterday. The chip stocks, in particular, onshore markets were double-digit gains for some, if not most of them. Right now we are seeing when it comes to some of these tech gauges are doing quite well here once again. Shenzhen still a little bit on fire here, but yes, it certainly has been a strong start to 2026. And that is thanks, of course, this rally in tech shares. For more, let's bring in Lanting Tu, our managing editor for Asia Equities, joining us from Singapore on what really do you think is driving this optimism back on the mainland, Lanting?
Yeah, I think mainly it is a dry powder that people have right now to put to use, and they chose the tech sector mainly. That's because a lot of people took profit towards the end of last year because of sort of a lot of uncertainties on the geopolitical front. And this year, if you look at investor sentiment globally, it has been quite upbeat. People are really putting money to use before and ask questions later. So the same thing is panning out in China. So if you look at overall trade volume, yesterday's trading session, actually we saw the highest volume in about 3 months, and the gains were also quite broad-based. If you look at the Shanghai Composite, more than 1,000 stocks were in the green, and today as well. So I think a lot of people are just rethinking the sort of sector allocation again, and tech sector continues to be a winner. So Star 50 is really an outstanding gainer because there's also a lot of listings coming up for on this gauge. And if you look at some of those names, they are really market leaders, Changxing and also Yangzi. Those are really two leading chip makers in China.
Lianting, so it looks like the rally is broadening, and I wonder, to your point, that people are rethinking their specific sector exposure to China. Are there specific themes or stock stories that your team is focused on today as far as some of the big movers are concerned?
Yeah, I think we are looking at the broader index level today just because of the milestones that CSI and Shanghai Comp hit, as you guys mentioned earlier. I think, these are not really fresh milestones because we saw the milestones being reached in October, but at least gains have been reclaimed for now, and people are now looking ahead to what's on the horizon. I think the next catalyst would be the MPC, and that will be in March. And overall, I think the macroeconomic front, data point on the manufacturing front looked upbeat, and Xi Jinping also offered an upbeat assessment of China's economy in 2025. So both on the macro level and on the sector level, it seems nothing is going wrong right now.
Okay. Well,
what could go wrong?
We could continue on this. Let's start a positive note. Lianting, thank you so much. Our managing editor there for Asia equities in Singapore. I mean, how Hong just mentioned, right? With liquidity, you gotta love everything, buy everything. Looking at fundamentals, at some point, fundamentals will matter. They do matter, of course, but what is our starting point for 2026? Now, just to quote Bloomberg Economics, Chang-Shu and her team, Beijing will be to front load stimulus measures this year to prop up growth. Now, our team, led by, there we go, says that the government has restarted a subsidy program to energize consumption, but only on a modest scale, and it's likely to roll out more measures. Some of the consensus forecasts right now, in case you're curious what that looks like as far as the different metrics of the economy, from growth, inflation, retail sales, industrial production, coming up on your screens. And I think the note from Becky, who joined us about 30 minutes back, was that there has been a shift in where that fiscal support is targeted, from things like appliances to more like infrastructure. So that's something to note, I guess, as we try and figure out which the big winners will be in the market this year.
Yeah, let's bring in Leif Eskesen, chief economist at CLSA, joining us now from California. Leif, it's good to have you on the program. I mean, generally speaking, you take a look at how global growth fared for 2025. It held up reasonably well if you compare it to back to the Liberation days. But interestingly enough, when it comes to what you're projecting for China is for a growth moderation for 2026, I believe at 4.4%. Which is, of course, below the target. Tell us a bit more about, what sort of weakness that you're expecting from the Chinese economy this year.
Yeah, I mean, so I think what is behind the sort of roughly 4.5% growth forecast we have for 2026 is an assumption around a couple of things that will be, slightly different than 2025, right? So I think an important aspect of your assumption is how much do you assume for fiscal stimulus, for example, right? So right now our expectation is that the central government deficit for 2026 will remain around 4% of GDP, which is the same as it was in 2025, right? So technically you're not getting, with that assumption, additional fiscal, impulse to growth in 2026. So that's one of the reasons why we have assumed a sort of moderation in growth for this year. Another thing is also some of that you can say, front loading that took place in 2025 of global trade ahead of imposition of U.S. tariffs. Some of that was also in China's case. You saw that in diversion of trade through other countries and diversification of trade in terms of exports to other countries. And we just don't think that will be able to continue to the same extent in 2026. If there is, shall we say, more stimulus coming out, of course, than what we have currently assumed, right? Then, of course, there's an upside to our forecast for growth this year, right? But we would need to see a step up in stimulus, especially on the fiscal front, to sort of see us moving closer to, should we say, a 5% target is what, if that's what they end up going with.
Leif, David here. So I guess just to talk more broadly, because I think you alluded to some of the tailwinds that perhaps might not be as felt and present this year, things like the front loading of trade. Does that apply as well when you look at your projections for global growth, things like front loading, AI capex? And if that is the case, if those tailwinds do fade somewhat, are there potential supports for growth that we could lean on perhaps?
I mean, so I think on that broader front, I mean, we think some of those, should we say, factors that have driven the resilience in 2025 are now in part or in whole in the rear view. So one of the ones we talked about was front loading of trade. In the case of US, for example, there was also front loading of consumption and business spending ahead of the imposition of tariffs. But as you also mentioned, a key driver of, shall we say, the resilience we had in US and elsewhere, but in the US in particular, was, shall we say, the front loading we also had, or you could say the significant boost we had to AI-related capex spending, right? So in the US, of course, that had implications for investments, for capex, but it also drove a lot of the export out of Asia, right? So Taiwanese exports, for example, held up by the strong AI cycle and so on, right? But as we look into 2026, right, I would not say we are looking at a significant drop-off in AI-related capex, right? But we do see a moderation in the growth rate of AI-related capex following the increase we saw in 2024 and 2025, right? So the level effect is going to kick in. There are also now being more questions asked about, shall we say, the commercial viability of some of these capex investments and associated lending on that front, right? So that also, to some extent, might constrain the impetus to growth from that side. A final thing I would highlight that, in our view, is going to be a bit of a damper on growth in 2026 is in 2025 we had, of course, relatively buoyant equity markets, and that led to positive wealth effects for consumers, and it helped with raising capital for businesses. We don't have the same, shall we say, prospects in our view in terms of upside to equities. So we think the sort of wealth effect and the positive effects on growth from that side as well will also diminish. So we do see some softness in growth in the next few quarters on the back of this. For the US specifically, we're looking at growth of 1.9% this year in 2026. It's a bit of a year of two halves, a softer first half and then a somewhat stronger second half of the year as you start to see the lagged effect of Fed easing and fiscal stimulus.
Yeah, it seems like we're starting to see at least some central banks in this part of the world lean a bit more on the hawkish side, Leif. But the Fed is still the key thing, where markets are still pricing in 2 rate cuts for 2026. Do you think they're pricing in too much? I mean, how far do you think the Fed can actually cut this year?
No, that's in line with our forecast as well for the Fed, two rate cuts, and we've had that for a while. Our view is that those 2 rate cuts would come in the first half of the year. That's more because we do see more of the softness and growth playing out in the first half of the year. And then as you go into the second half, as I mentioned, we do see a pickup in growth on the back of both monetary but also fiscal stimulus, right? So I think that's still realistic. But I do want to highlight that inflation risks in the U.S. are not gone. I think the latest inflation reading we got from the U.S. Was biased by the government shutdown, and I think actually that inflation number was lower than, should we say, the underlying inflation in reality was, right? So I think the Fed still has to contend with this persistence in inflation, right, and really have to move very cautiously. There's no way they're going to cut in January, for example, in our view.
Markets, investors, economists last year, Leif, had somewhat a serious rethink over the concept of U.S. exceptionalism, whether that's on the equity market side or on the economy. I think you just laid out your projection for U.S. growth.
Yeah.
How do you think that broader story plays out in 2026? What happens to U.S. exceptionalism this year?
Yeah, it's something we've looked a fair bit into, right? So, I think just a quick recap. For U.S. exceptionalism, of course, it's higher headline growth, it's stronger productivity growth that we've seen. Equity asset markets have also performed well. Some of the key drivers behind that has been strong productivity, as I mentioned, right? It's also been flexible labor and product markets, deep capital markets that provide significant amounts of risk capital, immigration, etc. Right? So of course, if you think about some of the new Trump policies that are coming in, right? More protectionism, not positive for growth. Then of course you have a tightening in immigration policies, which is also not, should we say, a positive for growth as well, right? Issues around, should we say, mission creep and pressures on central banks. So in terms of institutional quality, there are also some concerns there, right? So we think those factors will be negative for, should we say, U.S. exceptionalism and will bruise it, but it will not end it, so to speak, right? So we also still in the U.S. have a positive aspect that comes through from AI. And you can say AI investments and rollout has had more leeway to grow under the Trump administration, right? So we think potential growth will end up at around 2% still over the medium term. But these additional Trump policies that are bruising potential growth, right, are sort of capping a potential upside to exceptionalism.
Leif, fantastic. Happy New Year to you, sir, and your team. Leif Eskesen there, of course, Chief Economist at CLSA, joining us on their expectations for the year. Right, maybe Dr. Copper has something to tell you about that. $13,000 a ton, that's for the very first time. We'll have a deeper look at what's driving really the scorching rally in copper. That's coming up next. This is Bloomberg. The irony of looking down to see what's below ground, specifically to see what's going up. So the best performing commodity this year, and granted it's been just a start, has been copper, right? We're up, let's call it 6-7%. That's the LME contract. You look at what's happening on the CME, might be something different, but suffice to say, we've done well. 13,000 a ton for the very first time. Today, Martin Ritchie is with us, our metals and mining reporter, to tell us what is going on with copper, Martin. Why don't we start off with the demand side, because that seems to be the new component here.
That's certainly one of the components. There's really a lot going on in copper, and as you said, it's a really powerful rally. We've seen it's up now 20% just since the end of November, so really powerful year-end. Really powerful surge into this year. We're now well above 13,000 a ton, which is levels that were really sort of unthinkable even a few months ago. So last year there was a lot of mine disruptions which curtailed supply. There's a long-standing bullish narrative about copper because of its use in the energy transition and renewable energy and power grids. There's also a lot of positivity around copper used in data centers and associated infrastructure, so that added an extra buzz. But then you also have the prospect this year, sometime in the middle of this year, US President Donald Trump is expected to decide whether there should be import tariffs on refined copper. Traders are trying to get as much metal as they can to the US ahead of that decision, and that's just possibly going to starve the rest of the world of metal. So when you put all these things together, especially that kind of tariff decision, which is a big uncertainty, it is creating a lot of upward attention, drawing in a lot of bullish voices to copper. So it's a really momentum-driven trade at this point.
Yeah, I mean, as you mentioned, right, 13,000 seemed almost unthinkable just a few months ago, but here we are. This U.S. import rush seems to be driving a lot of the price action. What are the analysts telling you now on just how much more upside there is in copper moving forward?
We've already, it's very early in the new year, so we haven't had a lot of fresh updates to price forecasts and so on. But I have to say, we've already smashed through most people's ideas of where prices were going to be at this point, so early in 2026. I would say that one of the risks is, the tariff situation is fairly, temporary. It's time limited. Globally, supply of copper is not that tight. It's just you've got this strange situation at the moment where inventories keep rising, keep growing in the US, depriving the rest of the world of metal. And what people are doing is betting on the prices at some point in the first half of this year peaking out before the tariffs are slammed on and that trade is shut. Another risk is that the AI trade in world equities also stalls. All that positivity about construction of data centers, infrastructure and so on. Copper's become quite heavily tied to that, and if that pulls back, then copper might also.
Yeah, so I think some of these analysts, they got to get going, and maybe they need to upgrade their forecast a little bit.
Well, get
here.
to work first.
Yeah, it's only January 6th, right? Martin, thank you. Martin Ritchie, our metals and mining
David
reporter,
was just taking stock
Shanghai.
of the market already.
Yeah, for sure. Certainly one to watch. In terms of Asian markets and how the rest are doing, Martin, thank you. It's still doing quite well when it comes to taking a look at HSI. There you go. We're at 1.5% up now, close to 400 points up to there, 26,743. CSI 300, we are on track, of course, to close at 4-year highs, just around that 4,800 level as well. Japan's still doing quite well. Kospi heading the opposite direction here today. This is Bloomberg. Some stories that we're tracking for you today. Tesla's China factory shipments fell 7% I should say, in 2025, despite a last-minute bump in December. Prelim data from China's Passenger Car Association showed the automaker shipped over 851,000 vehicles last year from its Shanghai plant. Tesla is struggling with a slowdown in global sales, losing its title as the world's largest EV maker to BYD. Hyundai Motor shares have given up early gains in Seoul after its Boston Dynamics unit unveiled the latest version of a humanoid robot designed to work in the carmaker's plant starting from 2028. Hyundai initially plans to deploy its Atlas robot to handle highly repetitive tasks before plugging it into more complex assembly work by 2030. And we're going to hear more from Hyundai's robotics ambitions later on this week. Their vice president and head of robotics joining us live from CES in Las Vegas on Thursday at the Times on your screen. That's going to be part of that special edition of the Bloomberg Tech Asia this Wednesday at 8:30 a.m. in Hong Kong, Tuesday 7:30 p.m. If you're watching from New York, subscribers can use the function TV Go or watch live on Bloomberg.com.
Yep. Very, very quickly, there's a deal that's through. Cathay Pacific, Air China reducing its stake. Swires getting a bit more of that. It's playing out across the stock of Cathay Pacific. We're down about 2% on shares there. We'll have plenty more ahead here on the China Show.
$11:29 a.m. in Tokyo. Japanese markets are heading into that lunch break. And there seems to be still an up arrow story for Japan here today. Korea is doing the opposite thing. But the one thing to watch in the next hour is, of course, the all-important 10-year bond auction happening there in the JGB market. Right now, we are seeing yields heading lower by 1 basis point at 211 or so. So we'll see what the demand picture looks like here, of course. But Japanese stocks still doing quite well with the topics outperforming today, up by about 1.3%.
Yes, there's one specific stock that we were tracking there that was halted, of course, following that report. Hisamitsu Pharma, right, did spike on the back of that Bloomberg report.
The pain patches.
Hot patches.
Hot
Yes,
patches, yes.
Hot patches for the pain.
For the pain.
There we go. I actually have one
right on your back right
now on my back. Yeah.
What an endorsement.
Yeah. It certainly helps. It helps. We've been complaining how cold it is here.
It's 10 degrees.
In Hong Kong. And
it's cold for us.
We know that doesn't sound like a lot. But
Celsius we're talking about.
It is. It's freezing. And Min Min will attest to that too. It is. Yeah. It's one of those weeks where it feels a lot...
crisp.
The ski jackets are out, let's put it that way.
Yeah.
Ski boots and everything else. Unnecessarily so. Including the gym selfies, but don't get me started. Okay. Asia markets. So Japan is doing okay. Asia's doing okay still, 0.6%. Korea, though, tailwind coming from that specific market has gone away, at least for today. It's the Asia market in China that's doing the heavy lifting, precious metals, materials, not so much tech, although tech is still up. Asia Pacific ex-Japan is up 0.3%. So yeah, lots of reasons to buy into this momentum still here.
Yep, and we'll talk a little more about the geopolitics as well, with Chinese President Xi Jinping and South Korean leader Lee Jae-myung have reaffirmed their bilateral relationship in that meeting. Of course, the two leaders have met about twice, I think, in a month already, since if you count APEC, that meeting that happened late last year. So a sign that both sides are working to stabilize relations amid geopolitical tensions. Let's bring in our China correspondent, Min Min Lo. She's here right now. We talked about the tone was obviously very warm, but what really came out of this meeting?
Yeah, definitely business and commerce was the focus here because President Yi brought with him a delegation of about 200 business leaders, including the heads of SK Group, of Samsung and Hyundai as well. They were all there. And of course, President Lee Jae-myung has been wanting to turn around this trade deficit in South Korea that began in about 2023 or so. The concern is that that deficit could remain entrenched as China beefs up its own advanced manufacturing. So he's looking to expand trade, especially in areas like AI, like consumer goods, like cultural goods as well. So he cited the example of Korean beauty products, films, and games as potential areas for breakthroughs. And again, we know that China has placed that informal ban on Korean entertainment since the THAAD missile crisis in 2016. And this is something that they hope will be lifted in the future. They're hopeful that with trust being rebuilt over time, we could soon see K-pop concerts in Beijing again. But have a listen to what he said when he met with President Xi.
It's only been 2 months, but I have that feeling that I'm meeting an old friend I haven't seen for a long time. It's quite cordial and heartwarming. For thousands of years, South Korea and China, as friendly neighbors, have forged friendly relations. I am ready to follow the trend of the times and work together with President Xi to usher in a new chapter in the development of South Korea and China ties.
So he is hoping to start a new era of South Korea-China relations. So 2026 could be the year where we see this reset, but we'll have to see whether the durability of some of those outcomes would maintain after this.
And, you know, it's I think this applies any year anyway, but it's a very complicated geopolitical backdrop right now, right? We talk, you know, the big story was Venezuela, the U.S. and China. That doesn't seem to be affecting, or could be affecting really, and pushing these two closer together.
Yeah, so we will have to see how President Lee Jae-myung handles an expected bilateral meeting that he will have with the Japanese Prime Minister Takeichi sometime in January as well, because China certainly will be watching that very, very closely. China on this trip had already warned South Korea that they need to stand on the right side of history, especially amid this tension with Japan. And President Lee Jae-myung reassured China that they were going to stick with the one China policy. But also, you know, Lee Jae-myung has been one of those presidents that was really trying to balance the relations with U.S. and China as well, more so than his predecessor Yoon Suk-yeol. And I think it will be key to watch what President Trump does as well, how he responds to this closer ties between China and South Korea, because we know South Korea, for example, has been pushing back a little bit against that investment pledge. Some of the details still a little bit vague, and they were trying to support the won, which traders have perhaps reacted to by, you know, viewing this investment pledge as being too oversized from South Korea.
Yeah, and it's interesting, right? I remember when during APEC, the one thing was that he gifted him a Xiaomi phone, and there was this whole quick moment about, is the line secure? And they joked about,
there's a bit of banter there.
You can check the security backdoors and whatnot.
You made a homer.
You may remember that moment, right? There's a post that President Lee made of him actually using that Xiaomi phone, and he took a selfie during the second trip, which I thought was quite cute. Continuation of that as well. But yeah, certainly, as you say, the optics were very, very warm and fuzzy, it seems, there. Our China correspondent, Min Lo.
I was wondering, did they use the same phone, I guess?
Yes.
It was the same exact phone.
I think they mentioned it was the same phone that was gifted to him in South Korea. They used it and took a photo.
We need to see that. We need to see that selfie.
Was the Samsung leader there?
Huh?
Yeah. Did he quickly switch his SIM card
the SIM
in the
card.
car before that moment?
One can have more than one phone.
Yeah, okay. Well, thank you so much, Min there. Of course, we'll talk a little bit more about this from Harvard University Asia Center, South Korea scholar Seong-Hyun Lee joining us from Boston. Seong-Hyun, it's great to have you. Yeah, we talk about, all these fuzzy moments, and it seems like, people are almost calling it a reset of Sino-Korea relations. Can we call it that?
Well, the optics that you just mentioned from the summit between South Korean President Lee Jae-myung and, Xi Jinping were intentionally warm, but do not make a mistake. This for a geopolitical realignment. It's about managing, South Korea's managing tensions with China. The way I see it, Lee Jae-myung just executed a high-wire act of what, we South Koreans call pragmatism diplomacy. He's not pivoting away from Washington, its military ally, but Lee is securing a flow for the South Korean, China bilateral relationship, economic relationship, before the geopolitical ceiling lowers with President Trump's scheduled visit to Beijing in April. What South Korea fears is that with Trump and Xi set to negotiate a so-called grand bargain in April, South Korea fears that being treated as a bargaining chip or side dish on the menu by locking in a modus vivendi with Xi Jinping right now, Lee Jae-myung has preemptively defined South Korea's stakes before the superpowers cut a deal over his head. This was a defensive diplomacy summit meeting to ensure Seoul remains a player, not a geopolitical pawn.
So let's talk about what happens now. Okay, so let's call it reset. Let's look at specifically what type of specific commercial upside there is for businesses, and of course, we had a whole flurry of businessmen that, of course, come along when we see these trips. So specifically, what points of contact do you think we will see improvement on between the two?
Well, we are looking at Lee Jae-myung is still in China, and he's heading into Shanghai, and we are already looking at about 15 agreements, and they have agreed to cooperate on silver economy. South Korea and China, they both have aging demographics, renewable energy, crucially the resumption of cultural exchanges, K-pop, K-drama. This is Lee Jae-myung getting assurances that the next time there is a political tension between South Korea and China won't weaponize trade against South Korean companies like they did in the past. The dead fiasco that your China correspondent just mentioned. The economic takeaway is that this is not necessarily about economic cooperation expansion, but stabilization.
It's interesting, right? Because the way that they kind of framed it, I think it showed that there was almost like a cost that, given what she mentioned there about, if you go on the right side of history, I think that was the line that he mentioned to President Lee on this cooperation. How do you see South Korea really managing that relationship while not trying to pivot away from the U.S.?
It's interesting that you cut up, Xi Jinping, you're right, explicitly urged South Korea. What he said was stand firmly on the right side of the history and make accurate strategic choices. This phrasing is a direct reference to the U.S.-China rivalry that South Korea is dealing with or coping with. Lee's counter move was to observe this pressure without conceding South Korea's alliance with the United States. South Korea is definitely walking the tightrope between U.S. and China. And Lee Jae-myung's formula, the way I understand it, is dignified pragmatism, respecting the one China policy verbally, as he did in his interview with the CCTV, but demanding practical guarantees for South Korean economic survival in exchange. It is not about choosing side, it's about choosing survival.
Okay, well, this is going to be a long, drawn-out process. It's going to take years, and I think one of the arguments you're making, sir, is we are at the beginning of the era where South Korea will need or can't stop riding on two boats, right? And I wonder and I'm just going to use Venezuela as an example, not specifically because of this, but events in Latin America recently have highlighted that the U.S. is trying to cement its influence in its part of the world, in its neighborhood, right? Its sphere of influence. And I can't help but think whether or not that could apply to U.S. allies in the Asia Pacific that somehow, through the passage of time, will slowly start to fall under the Chinese sphere of influence.
I don't want to be, sound diplomatic, but I want to avoid hypothetical questions. But Lee is, the way I see it so far is that Lee is not necessarily pivoting away from Washington and aligning with China. He's securing the funds to stay in Washington's camp. Lee Jae-myung knows that South Korea can only be a robust security partner to the United States if South Korea's economy is not bleeding out from Chinese coercion. He didn't go to Beijing to change sides. He went to stop the bleeding so Seoul can remain as a capable ally of the United States. And Trump values ally that is resourceful, and Lee is doing exactly like that.
Can I ask then, there are reasons why Korea is an ally of the U.S. Perhaps the reasons change because of the passage of time, I guess, just to reference that again. In your view, why do you think Korea should remain or remains a U.S.? What is the upside for Korea in terms of remaining an ally of the United States?
I think South Korea is aiming for the future global economic trend, particularly AI, and also superpowered, quantum computing. And they think that this is the future of the global economy, including United States and South Korea as well. And, the original technology is, the technology stream is all from the United States. And the South Korean political elites, they see this is a very important foundational bedrock that South Korea could secure so that South Korea could survive and also prosper in the future economy amid recent years of economic slump that South Korea has experienced.
Thank you so much for the time there. That was Harvard University Asia Center South Korea scholar Seong-Hyun Lee joining us out of Boston. In fact, we were just talking, Yvonne and myself, just before the interview started there, of the selfie, of course, that took place. And I think we have some pictures, not just of the pictures of the selfie, but the selfie itself. And this is the post. There we go. This is the post.
By the South Korean leader, of course. Yeah, pictures of the selfie and then the selfie itself is included there. But very
there
cute.
You go.
Very cute. Taken from the Xiaomi phone.
That's a nice picture.
Yeah, it's cute. All right, coming up, we're talking about Venezuela now. Nicolas Maduro declares himself innocent of U.S. narco-terrorism charges in his first court appearance. We have details coming up. This is Bloomberg. Ousted Venezuelan President Nicolas Maduro has faced a U.S. court along with his wife, pleading not guilty to narco-terrorism charges. Their appearance sets off an extraordinary legal battle with major geopolitical ramifications. Bloomberg's Miles Miller reports from New York.
Venezuelan President Nicolas Maduro pleaded not guilty Monday in federal court in New York to charges that could keep him behind bars for the rest of his life. When he walked into the courtroom, he wished people Happy New Year, and at one point, someone screamed at him, and he had a loud outburst saying he was kidnapped. He and his wife sat wearing headphones and jail garb. to listen in translation as Judge Alvin Hallerstein read the charges against him. When asked to enter a plea, Maduro said through an interpreter, "I am innocent, I am not guilty, I am a decent man, I am president of my country." There are 4 counts against him, including narco-terrorism conspiracy, cocaine importation conspiracy, and weapons charges. His wife faces 3 counts. If convicted, he's looking at life in prison. Starting in 2000, he allegedly moved loads under protection of Venezuelan law enforcement and became foreign minister in 2006, starting to sell diplomatic passports to traffickers. When they needed to move money back from Mexico, prosecutors said he arranged for government planes to fly under diplomatic cover, meaning that no one was checking what was on board. The indictment says he and his wife ran armed guard escorts to protect cocaine shipments. They maintain state-sponsored gangs, prosecutors say, to facilitate the operation. And when people didn't pay or threatened the business, they ordered kidnappings, beatings, and murders. And this is a massive scale. By 2020, the State Department estimated 200 to 250 tons of cocaine per year were moving through Venezuela. Also charged is their son, Venezuela's interior minister, and a gang leader. Maduro represented by Barry Pollock, the same lawyer who represented Julian Assange. The judge in his case ordered Maduro and his wife held without bail. Trial won't happen until 2027. They'll return to court on March 17th. At the courthouse in Lower Manhattan, I'm Miles Miller, Bloomberg News.
Meanwhile, Bloomberg's been told that China's top financial regulator has asked banks to report their lending exposure to Venezuela. That's after, of course, the U.S. ousted Nicolas Maduro. Sources say the regulator has also urged banks to closely monitor Venezuela-related credit to assess, of course, potential risks to lenders. China has lent billions of dollars to Venezuela over the years, mainly to support energy and infrastructure projects.
And former U.S. Commerce Secretary Wilbur Ross says China and Russia have benefited by getting cheap Venezuelan oil. He told exclusively that President Trump's vision for a U.S.-led revival of Venezuela's oil industry will be a long, complex, and costly undertaking.
Well, there's a lot that needs to be done. In terms of laws, Venezuela has the weakest property rights laws in the whole world. So that has to be fixed so that you have some assurance of private sector continuing ownership. But I think realistically, companies going in now in a relatively complex situation are probably going to want guarantees against expropriation. And that's not unusual. The U.S. and multinational entities often give expatriation and foreign exchange guarantees. Now, the debt structure is mind-bogglingly complicated. They have about $160 billion of debt altogether, counting expatriation claims, counting funded debt, counting debt for oil, counting everything. Those bonds have been trading in the high teens, low 20s. They could probably be restructured in the 30 to 40 cents on the dollar. So in the overall context, that's not a very big number. And one of the few good things is that the IMF has no exposure to Venezuela. And IMF is entitled to lend up to $50 billion. So they could very well be a source of some funding.
If I can just jump in on that point before we continue, Wilbur, because some of the exposure we do understand comes from China and debt owed to Chinese banks, for example. If there is a restructuring of debt in the country, do you expect the U.S. to exert force of who gets priority in the capital stack? Does it change where back payments and different restructuring comes from, just given the geopolitics of the moment between the U.S. and China?
Right. Well, both the Chinese and the Russians had made loans to Venezuela that are payable at least partly in oil, but oil at very, very advantageous prices to them. So they are part of the problem in that they're getting oil very cheaply out of Venezuela in return for debts that otherwise are never going to be paid. Now, the oil that comes out of Venezuela is mostly what we call heavy oil, and that requires a slightly different refining process from the American shale oil, which is mostly light oil. Both China and India have very strong facilities for processing heavy oil, because a lot of the Iranian oil that they had been getting also is heavy.
And that was the former U.S. Commerce Secretary Wilbur Ross speaking with our colleague there, of course, Danny Berger. Now, if you want to rewatch that full interview or some of the other segments you might have missed, the function you run on your terminal is TV Go. We'll take a short break. We will see you on the other side of it. This is Bloomberg. We're looking at shares of Jollibee in Manila. I think have resumed trade after being halted for a few minutes. Well, so far academic. We're up now 7%. That's on the back of this plan on the part of the company to spin off its international business and list it in the U.S. Mind you, it's early 2026, and the timing for that is late 2027. So that's still going to be quite a bit away.
We're joking about what the ticker should be.
Oh, yeah.
B-U-S, J Joy, I say. C Joy, Chicken Joy. That'd be good.
C happiness. C happiness.
All right, we're talking about montage tech.
Chris P.
Oh, I like that too. All right, give us your input here if you want. Montage Tech. This is the one they're rising there on after
I think this is a city thing.
Has initiated a buy on, of course, the AI hopes. They're saying that really the Chinese semiconductor names to gain exposure to the global data center expansion. It's a rare opportunity, they're calling it. So they're 3% up for that. And Popmart, yes.
Yeah, you take the story. I don't want to do it.
Oh, no. It's interesting. Right? We're up 2%. So Morgan Stanley is saying, look, the sales potential may be underestimated in North America.
What?
Maybe they're still buying them up in the U.S., but they're saying a lot of the stronger drivers are going to be non-Labubu products, they think. So not just Labubu.
Can't wait.
That's it for us here. See you later.